Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of September 14th, 2025. And in this week's episode, it's just myself, Sprocket888, and I am going to reflect back on some earnings this past week where, it's true, I panicked. And we're going to dive into what that panic has created for me and kind of what I'm going to do about it moving forward. And it is all around Oracle earnings. So if you were not paying attention, Oracle announced earnings and they had a massive over 30% move to the upside. So we'll dive into that situation in this week's episode. But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. Also, you can find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts, so look us up, subscribe, and if you can't find it there, let us know, and we will get it there. But let's hop to this week's content. So in this week's content, I really wanted to touch on the Oracle earnings that occurred. Now, this is something I didn't technically play these Oracle earnings, and the reason I didn't play the Oracle earnings, although they did hit my screener, was I actually still had an open position from the last Oracle earnings that I played 3 months ago. So 3 months ago, I had played a strangle on Oracle, and they surprised to the upside pretty significantly, although not as significantly as this most recent move. It breached my call, and I kind of went into my regular management mode, and I rolled that call forward, collected some more premium, but I was early assigned on those call positions. And so I ended up short Oracle from about $195 a share. And that was kind of okay. But as we approached earnings, the volatility was really elevated. And I thought about maybe putting on a position to the put side based on all the elevated volatility. And in hindsight, I probably should have stuck with that. That probably would have been the most appropriate game plan for me. But I decided to wait out the earnings and then put a trade on post earnings. And what ended up happening was Oracle really, really surprised to the upside. Now, ironically, they reported disappointing earnings and disappointing revenue. So they actually missed on both of the expectations for the particular quarter. But what they did announce was some just massive backlog of orders and kind of almost 4x the expected backlog of orders. And that just sent the shares just skyrocketing in the aftermarket post earnings. That was, it wasn't feeling super great. And I kind of waited until the market opened. I was short the shares, so I didn't actually have any options positions on. So I could have traded after hours. But a lot of those after hours are very volatile. There's always a potential for that reversion to the mean. And so I kind of held off to see, okay, well, how did it open the next day? And that's where I went wrong. So the stock opened the next day, and it kind of opened really strong out of the gate. I gave it a little bit because there's always a lot of volume and volatility within the first hour or two of trading. And it didn't seem to kind of be giving up much. It just seemed to create more and more momentum. And I was kind of getting deeper and deeper into the hole. And so admittedly, I panicked. And there's a strategy that I've been starting to tinker with. And this Oracle was going to be the third one of these positions that I put on this strategy. So let me pause from the Oracle narrative there on opening day and talk just a little bit about the strategy. So the strategy I want to kind of talk about is something that I've been really struggling with when my strangles are breached to the call side. And so what I mean by that is I put that strangle on, which we've talked about in past episodes, where I'm selling the put and I'm selling the call. And generally speaking, stocks go up over time. And so I always am less nervous about a breach on the put side. yes, I can get assigned. Yes, I'll own shares. I'm usually okay with assignment. Now, I'm okay with assignment on the short or the long side. But truth be told, I always hope if I'm going to be assigned, it's going to be on the put side where I can actually own the shares and then appreciate them over time. Because what happens is when you breach on the call side, that's the worst situation you can really be in, because there's an unlimited loss potential, because there's no guarantee that you really will get a reversion to the mean, and you constantly could potentially climb higher and higher and higher, and because you are short the shares, that will just put you more and more in the hole. And so one of the things that I started tinkering around with, and I've done it twice previously, is as you breach, if the breach is very, very strong and sustained. So what I mean by that is you breach hard through the call side, and you wait a number of trading days, and it really seems to hold its momentum, hold its consolidation. That is where I have started opening up a short put position in double the size of my short equities. So example that I had on this was Advanced Auto Parts. So Advanced Auto Parts was breached on the call side. I had 15 contracts, so I ended up being short 1,500 shares. Now, Advanced Auto Parts really had some strong momentum after that. And so what I ended up doing after it had displayed strong momentum for several days after earnings is I went a short put. I think at the time I did like a 30 delta or 35 delta of double it. So I went short 30 put contracts. And the idea is that momentum is going to continue to go up. But the plan is for a retracement kind of falling below that strike to get assigned. And when I get assigned on those puts, I am put those 30 contracts, or in that case, 3,000 shares. Now, that would cover the 1,500 shares that I was already assigned short, right? So that would leave me with a net long of 1,500 shares. So the idea is I'm collecting premium from selling that short put. That's going to cover my call on assignment, and then I'll be long basically the number of shares that I was trading to begin with. Now, how did I arrive at the double shares number? Well, that goes back to position sizing. And so the position sizing of assignment, when I entered, I was okay to be short or long the position that I opened. And so I want to keep that position size in play, but I need to cover my short, or in the other case, cover my long, although I haven't deployed this on the long side, only the call side where I'm short. And that has proven to be very successful, actually extremely successful. In Advanced Auto Parts, it ended up dipping below what I sold. I got assigned the 3,000 shares. That closed out my 1,500 shares. I was long 1,500 shares. It hit a level, bounced off that, and continued to rally higher. I then sold covered calls against it to get them assigned away, and netted, orders of magnitude and multiples greater than the initial trade. And this is really where I'm starting to deviate from my core strategy, but it worked out very well. The other trade that this happened on was Elf Beauty, where I ended up being short Elf Beauty shares. It breached very, very strong, showed very strong trend afterwards. I went short puts, double the size, which covered my shorts and then converted me to long on the same original position size. And that was really where my head was at with Oracle. And so going into Oracle earnings, what in hindsight I probably should have done was put that double the position size on the put side before earnings. To be honest, I don't really know why I didn't do that. I was just not paying attention. So the plan was post earnings, that is what I was going to do. So we're going to see how Oracle reacted. And then if it fell, I was going to put on that put of double the position size to get assigned. And so I was going to play it really close, basically at the money post earnings, because you're not going to get as much movement, much volatility. And then that was kind of the plan to battle back out of this short Oracle position. Now, what happened was not what was expected by any stretch. So we're going to now zoom back to the day after Oracle earnings. And I panicked. And when I panicked, I decided to execute the trade strategy that I just talked about, where I ended up going short on the put side of 325 was the strike that I had used because it looked like this was just going to keep going up and up and up. And I doubled the position size, so I would be get the initial short 300 shares covered, and then I would end up being long 300 Oracle shares. And so what I want to do is kind of show you a little bit by the numbers here first, and then I'm going to dive into a little bit of the chart. So this is by the numbers where we stand. Now, I don't really know how this is going to pan out, so that's why we got question marks at the bottom. But largely, this started on June 9th, which was the previous quarter earnings, not the most recent, where I put a short strangle around 165 to 195. I sold 3 of those at 357. I collected a little over $1,000. Now, it breached very, very hard on 295. I think we went up into the 215s, 220s, actually maybe even a little bit higher than that. I was able to roll it. So that was a week of expirations. I rolled it out to the next monthly. I was able to roll that 195 call, collecting $15.20 times 3. So I collected another $4,560. Now, I did take a loss on the closure of the short calls that week of expiration to the tune of about $3,492. Balanced that against my 1071 that I made on open, and I had a net loss on that initial strangle of 2421. So I could have walked away from the trade with a loss of 24.21 had I not continued to roll. But that's not really my strategy. My strategy is to roll and kind of wait for that reversion to the mean. And so that's what I did. I came out there. I ended up getting assigned short 300 shares at 195. And it never really came back below that 195. I'll pull up the chart here in a minute. We came close. And this is where what I probably should have done in hindsight is recognize that we have breached hard and we have sustained that. And that's really where I should have put the put on to gather some more premium prior to this earning announcement that came out this most recent week. Now, what happened is the earning announcement came out, the stock shot up. I panicked and I put the short put on at 325. And you'll see when I pull up the chart why that was a bad move. So I did collect another $4,230. So that's a plus. Now, what I'm effectively in right now, and it really depends on how the price action plays out, but I will be locked in for a loss of about $130 a share. And I have 300 shares. So the reason that is because I was assigned those shares at 195. And if I'm assigned on the put side, I'm going to have to purchase those shares for 325. And ideally, what I really should have done is kind of that same strategy that I talked about, was wait a few days to see where the momentum is, then place the trade at the money. And do the same double position, hope for assignment, cover the shorts, everything I already talked about in the strategy part of this video. So let's move over and take a look at the chart and see why that panic likely cost me big. All right, so this is the chart of Oracle. Now, what I've done is these are 4-hour candles. Are really zoomed out because honestly, the individual candles don't really matter. This green E over here on the left is the previous quarter earnings. This is where we had this big up move where I got assigned. And what happened is it punched through, it retraced back a little bit, ironically, to the level that I sold the call at, and then kind of bounced up. And we've kind of been climbing from there. Not super hard, but pretty confident climbing, pretty good buy volume. And we slowly started kind of tracing back down. And to be honest, probably what I was thinking, and then this really was a deviation, and this is going to be a reflection for me, is I was thinking, okay, we're coming up on earnings. We got a lot of volatility. We're kind of starting to trace back from this. This is already really, really, really high for Oracle. And I was really kind of secretly hoping, wishing, where there was a probability that we were going to get a strong down move below the 195. I was going to be able to close it all out and be done. Of course, that's not what happened. And this massive green candle was the earnings announcement of a 30% move. It continued even more the following day, getting as high as 345. Now, I'm going to zoom in just a little bit here. because what I want to call out is that poor timing on my part. I started to see this still rocket up, and I basically entered that 325 at probably the worst time. What I really should have done was wait. Because what ended up happening is day after day after day is Oracle has been retracing. And so what I've marked here is that blue 325. And then this bottom blue line is the 195 where I was assigned. And you can see that gap is a locked in loss of $130 a share. So if I get assigned here, if we don't get above that 325, I'm going to end up being long from 325, which to me is still kind of okay. I mean, that was the whole idea of getting long Oracle is they clearly have had two moves now, surprise to the upside. There's been a lot of momentum behind it. There's been a lot of drive. And so being long the Oracle shares was something that I'm kind of okay with. And really what kind of goofed up here is just the timing of doing it. And that screw up of timing, I actually screwed up twice. So to me, I screwed up by not putting that double put on before earnings. That really should have been where I captured some of that elevated volatility, looking for an assignment there. To me, this is where I really just wasn't thinking, and my mind kind of raced in the wrong area, thinking, oh yeah, it's going to do this move, which I really should have stuck with the collect the premium, play the probabilities, rather than kind of banking on a directional move, because banking on directional moves is not my trading style. So that was kind of the first screw up. The second screw up was the panic that ensued after this 35% move, 36% move, where it just really, really, really ramped up. I mean, this was a major hit to my buying power, and I panicked and decided to put the trade on to start trying to cut the loss as much as possible. And again, an immediate reaction after a violent move, either up or down, is never the right strategy, in my opinion, because it's responding emotionally. It's going to settle out. It might fall a little bit more, it might gain a little bit more, but at the end of the day, you really want a lot of that volatility to finish bleeding out and to kind of settle in with some consolidation. And we haven't really seen Oracle kind of consolidate yet. As we kind of zoom in, we're getting some major red candles coming back down. Now, it probably could come down to this previous level here of around 250 to 260. And it might bounce off of that and kind of keep going up. It might fail and go down, but either way, if this is a trend upwards, which is what I'm playing when I'm short the calls and I'm doubling my position, is end up being long those shares. So really flipping back to this chart of where my profit and loss kind of sits, it's just a matter of timing, and it's a matter of that panic that ensued has screwed up the timing and have put me in a position that is very unlikely that I'll be able to battle back as well as I would have been able to battle back should I have been more patient on my timing. Because I think the order of events that I would have played this should have been different, where I should not have opened those 6 short puts so quickly after the earnings announcement. If I had just waited, let the price kind of come back down on the reversion to the mean, and then place that short put, the gap between 195 and where that short put is would have been much smaller. And it's that gap between those two that is the loss that I'm battling back from. So because I set that at 325, I have effectively locked myself into battling back from about a $39,000 loss. And that's very unfortunate because it's going to take more movement to the upside post-assignment or more premium selling against it, and it's very unlikely that I will capture all of that back. If I had waited, that gap would have been smaller, maybe on the order of 20,000. Now you can see I've already ate back closer to 7,000 of that so far. And once I get assigned and I'm long 300 shares, I can sell covered calls against it to eat that down. And then I can also profit on the potential of the upward movement should it continue in the upward movement, which is the momentum of the stock. I just didn't really wait for any of that consolidation or that volatility to really kind of settle itself out from such a strong upside reaction to such a large underlying. And that brings us to the end of this week's episode. Not a super uplifting episode, but hopefully it gives you a sense of reality, a sense of, hey, everything is not always roses. And even myself, who has done trades over and over again, can succumb to kind of emotional panic, which is what really happened here. Yes, I have been in losses. Yes, I've kind of gone through that. This particular one was just so large, such a big move, and I didn't have all of my mental state in the correct place, and I panicked. And that just shows you that when you panic, when you deviate from what you should have done from your plan, it really shows you can screw things up. We'll keep you posted on how this Oracle trade pans out. I really do have high hopes for that breached call strategy that I talked about, where once you breach the call and you stay breached with good momentum, good price action, kind of doubling your position on the put side really close to the money, can seek for that assignment to close out those short shares, flip your position long, and then kind of play it from a long move on the underlying. So we'll see how that goes. Hopefully your trading week has been better and you did not suffer such a large move against you as Oracle. But either way, good luck out there. Have fun. And remember, think outside the block.